What's going on, everybody? In today's video, I'm going to show you exactly how you can buy stocks for cheaper than what they are showing in the market. So with that being said, let's go on ahead and jump right into this video.
I've been getting dirty money.
Okay guys, obviously if you've been around here with my channel, you guys know I don't feel good based off my voice. But this is a video, I think this is something very important, and I think we should talk about it. And you guys are going to see this is a Robinhood account. I don't trade on Robinhood. I trade off of TD Ameritrade, or E-Trade is where my huge account is. But that's neither here nor there. You guys are coming here for the information, so let's jump right into this one. You guys can see I already have this one pulled up here, Coca-Cola. So we're going to go to it here, and I chose Robinhood to do this demonstration on, mainly because I feel like a lot of people use Robinhood nowadays, and I'm not saying that's anything bad against it. I use it as kind of like I'll throw a couple $100 in it every now and then just to gamble with, and that's just me. And there's nothing wrong with, again, you guys using it full time 100%. I have no problem with that ever, but that's just me. So Coca-Cola, I do like that they've done some things here. I'm not going to lie to you. This is getting better. I said better, not perfect. But we're getting better here with Robinhood. We're getting some more resources. But how can you buy a stock? If the stock's at $59.55, how can you basically buy a stock for cheaper? And I don't think we should be on one day. Let's go to a 1 year chart. And say we want to buy it for, and this is why I pulled this up, because this doesn't show it very well. I want to go to a 1 year chart. And we think that the market's going to continue to drop, and we want to be able to buy shares, but we're not guaranteed that it is. But you know what? We feel like the fair value is, let's say $56 here is what you're going to see here. 55 or 54, 55 is kind of like where that bottom was at 54.39. But you know what? We can do a 56, no problem. And if it comes down to 56, we definitely want to own it, guys. Like, that's our value. This is just for demonstration purposes. I'm not doing this, but this is just Coca-Cola. Everybody loves Coca-Cola, it seems like, so this is why I'm doing it. I'm going to trade options here. Now, again, there's risk in every trade you take. That's something I want to be very clear about. I do like that Robinhood's putting this out here. Me, I'm going to go to 26 days. Or 33 days. I want to get paid every month, so this is what I'm doing on it. But I also want to own Coca-Cola. And what you're going to do here is you want to move to a put. Now, why would you want to move to a put? If you want to buy the stock, you don't want to bet that it's going down, but you want to buy the stock at that fair price that you think is fair and it's a good price to buy at. But you don't want to buy a put, though, because it's going to lose value. It's going to lose intrinsic value. You guys know options go down in value the closer it gets to expiration. You don't know if it's going to happen in the next 33 days. Well, I'm going to show you how. I do it where I collect premium, and I'm going to be able to buy it if it ever hits. So what I'm going to do is I'm going to go to sell. You guys can see I have sell here, and I have a put here. Again, we said the price. I want it to be, we said 56. It's fair. It's at 59, almost 60. So I'm going to get a $400 discount basically per 100 shares. And what you can actually see here is you can actually probably do this for a little less. We said 55. I just want to double check here where I'm at. We actually said 56, which is okay. So there's no 56 here. You see that. So I'm going to go to 55. So what I'm going to do is I'm going to click this sell button. And you guys are going to see, so what will happen is this share, or you're selling this option, which means you're instantly collecting $3,300. Now, you are locking up the $5,567, basically, or actually, it's $5,500 is what you're locking up, because you're collecting $33. It's taking that out of this price. But here's the thing. If you want to own it at $55, you're going to collect this $33. If it doesn't come down at all and it continues to go up, you collected the $33 off of your $5,500 no matter what. You got your little bit of return, maybe 1% there. But the other thing you're going to do is if it does come down to 55, the only thing you're out is the $5,500. is because you're going to collect this $33 no matter what, as long as it expires. But if it expires in the money, you're only paying the $5,500. Now, the stock could continue to drop, and get down to 50 or something like that, which could happen. But you said before we started this, you wanted to own it at a fair value price, and you thought $55 was a fair value. And again, this is not a very volatile stock at all. So, you're going to buy it at $5,500 still, which is $55 because 100 shares. Each one of these is worth 100 shares. And that's what you're going to do. You're going to sell them. And the other one that I actually will do this on, if I think we have a really big red day like we did on Friday. I didn't do it because I was busy on Friday. But I will come over, and I think this is a good one to actually look at for. You have to have a little bit more risk adverse. I'm not saying do this with all of your money. If you have a $25,000 account, don't bet $25,000 basically on it, spending it on a leveraged ETF. I don't recommend that at all. But we're in a 1 year, and you guys can see this thing has done great in bull markets. Obviously, it's a leveraged QQQQ, which is the NASDAQ. But go to 1 year, 1 day. And you know what? If this thing falls, I'm going to say my fair value is like $17, $18, I think. Because if you look at Max, this dip right here was $17. So, I mean, I'd even pick it up at 18 or 19. So, let's go back here. We want to move out 33 days. I want to sell a put. And I'm looking for an 18. Look at that. Oh, wow. The big move on Friday created a lot of premium for this one. And again, I'm only spending $1,800 to make $47 on this play. Premiums went insane on this one. This is actually the kind of play you're looking for. Now, again, I'm not advising anybody to go buy leveraged ETFs like this one. But on normal stocks that you absolutely love, you want to buy, maybe you absolutely love tech and you believe in tech. Well, this would be the one that you want to sell options on then. Because, again, you're spending $1,800. You're guaranteed $47. If it does go lower than $1,800, you still want to hold this because look at the upside of this. Guys, this used to trade at $75. And this is calculated with the split that they had done. So don't come at me acting like the split, it was worth more. Yes, it was worth more, but they did a split. So now that high would technically be $75.40. Don't come at me with that crap. But, or I think it was actually 82 something. But you get my point. It's at 23.82 right now because we're in a down market, or what they call a bear market. Everybody thinks it's going to go lower. Well, there is nothing wrong with buying these stocks, and I'm going to tell you 100%, I don't always buy these stocks looking to hold forever. I will buy these stocks on a really red day, like a Friday was, and again, I was just busy, so I didn't get this one done, and I actually am kind of regretting it now looking at it. I'll sell an 18 at 33 days, and if it continues to skyrocket, well, obviously, I'm going to collect this money on it, which is fantastic, and I'm just going to collect that money and it ain't going to matter. But what you can also do is you can run a covered call on this as well. This is where we're trying to get shares for cheaper. So I would have probably done this one on a Friday. With the premiums this high, I would have loved to own TQQQ at $18. And if it does get executed and it comes down to $18, this one moves dollars at a time, guys. Look at the 5-day chart. Dollars at a time. So if it does come down to 18, it can pop to 20 the next morning. It could pop lower. I mean, it can go lower. Anything can go lower, guys. But I'm looking to buy on those really bad red days, those options, or just the stock on things like this, so that I can buy them. Next morning it pops open, or maybe a week from now, we get a huge pop in the stock off of some crappy news, because that's how the market works right now. And then I sell in for a profit. Yeah, I take my capital gains, blah, 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 blah. That's a different conversation. It's okay. I'll take my short-term gains. But for your long-term account and you're wanting to buy stocks like Google, and again, I think Google is the best one. We want Class A. It's not. The price difference is not anything. We're looking at a 1 year. It got down to like 75. Right in here. 83. I think it was down to like 78 actually. Anyways, and I got down to 86. Anyway, I think it was 87 is where I was wanting to buy it. I was hoping it would go lower, but I was willing to buy it there. So, again, go to Google. Guys, this is, and you can do this on any platform. It just enters a little bit different. Class A. I want to go to options. Now, again, this one's more pricier. So, you're going to have a little bit more money. I'm going to go to 33 days. I'm going to go to sell, and I want to go to a put. And now, for a $10,000 one, I'm not saying you are going to collect the best amount. And this one can move. Google will move. But the chance of profit you can see right here. I want it to be over 20%. I think Google is a great buy at $85 personally, or 80. I would really like it at 80. So, but you're going to tie up a lot of capital for 30 days out. You're probably looking at more at this 85, which means you're tying up $8,300, which is not a small chunk of change for most people, and you're getting $113 back. Now, you can play with the bid and ask on this, basically meaning if you go to hit continue, you can actually change this and, make it $1.20 or something, and you're going to get more bang for your buck. Obviously, that can happen. But that's not what this video is for. This video is just to show you that you can sell options and be able to do this in your long-term account and get stocks at a better price. Again, it may not work every month. Maybe every month you're just collecting premium until it doesn't. And when it doesn't, short-term wise, you're upset because oh, I bought it and I'm down $100 on it instantly. Well, for one like Google, if you're down $100 on it instantly, you're not down because you collected $100 in premium. Because that's where this comes in right here. Or not this one. My bad, guys. Get rid of this. And you guys can see you can collect more. This is where this $100 comes in. $113 in premium. You're collecting that and then moving on. The big thing you're getting is you are expecting Google to go back up. Google used to be hundreds of dollars a share. And I know before the split and everything, but again, everybody expects it to get back there long term. They've got great cash flow. They really don't have a ton of debt. That's something, again, I think you guys should go look more into, learn how to read those reports, understand debt versus cash in, cash out, net profit, not gross profit. Look at those things, where their investments are, what they're doing to grow the business still, and their revenue. Look at those things, figure out the companies that you want, figure out the price that you would like it at, and then go sell options against it. And then when it does go fall, hey, you just bought a $100 stock at $85. And literally Google was at like $100 just like on Wednesday or Thursday. And then the market fell. You bought it at $85 now. And then now it goes back up to $100. That's $15 a share. That's $1,500 you just made off of $8,000 or $8,500 in less than a week if it pops. Or, give it a couple days. That's more than a 10% return on your money. Do the math. Thank you guys all for watching this video. If you have any questions, comment below. I will help you guys out. Let me know. I'm not a financial advisor. This is just for my fun. See you guys.